3500 as we get ready to trade November week 2, 2022. We just came off of a week with the Fed. We're going to start off looking at the intraday chart. Just want to remind you that coming up this week that we are about to trade, though, we have the midterm elections on Tuesday and Veterans Day on Friday, where the bond market and the banks will be closed. So we could have some interesting thin volume trading on Friday. Be careful about that. All right, starting off again here, looking at the intraday chart. Wednesday afternoon, I'm over on the left side of the chart here. We got the Fed statement and the start of Powell's press conference. Market did not like his prepared remarks, began to sell off, and things just got worse as that press conference went on, and we just sold off into the close. Then topped that off with a gap down open on Thursday and a breakdown for a look below 3,700. Started at a look below 3,900, ended with a look below 3,700. 200 points between around 2:30 Eastern and then on Wednesday to just off the open on Thursday morning. We spent the rest of the day, Thursday and Friday, trying to rally back, getting no higher than about 37.96 with Friday's high. Slammed down again, tried to come back in a rally Friday afternoon to close the daily candle green. That's about all you got out of that on Friday. A close for the week above the 20-day, but a close for the week below the 10 and the 50-day. So really a mixed bag there. Looking at the roadmap, you can see what I'm talking about here. A spinning top candle with a long buying tail, a long selling tail, a long buying tail. Actually, this is the selling tail on top, and this is the buying tail on the bottom. But closing the day green, but really the candle of indecision. What we need to see if we're going to see some short covering going into the elections on Tuesday, we need to come out of the gate strong, take out Friday's high and the 50 and the 10-day, and close above this on Monday. Then we could really get some fuel and some short covering going on Tuesday, and then see what happens with the results of the election Wednesday, and see if this all ends up being a head fake and we fall and sell off again, or do we continue the breakout towards the 200-day simple moving average. Right now, to the downside, I tried to explain this week, but there was a level back here around 36.47 that's sort of going to be like a magnet if we fall and break below the low that we set last week at 36.98. Coming off of this low set in October, the fresh new low for 2022, we bounced and pulled back into October 21st and set this low at 36.47, and from here sprang this rally that topped off last week with our November high at 39.11. So coming down here to back test this level one more time, hold above it, play through the 80 handle rule, maybe hold around 36.50, maybe 36.49, and reversing, that could be a great point to get long for a nice November rally taking us into Thanksgiving. However, if this level breaks, we're going to get a full-on back test likely of this low set in October. And if the October low, the 2022 low, doesn't hold, it'll be another break of the 3,500 level, and that's going to send us down all the way to around 32, 35, as we've discussed before. We're looking back to the activity that was going on back in 2020 after we set the March low. Looking at our fork chart, part of the thing to the, for the bulls here, if we could get over the 100-day and set a new high for November, if we could break out of our bear fork here. Right now, this is coming in around the 39.50s. If we could break out over 39.50 using our 80 handle rule plus breaking out of our bear fork, will most certainly get us to 4,000. If we can get to 4,000, we can get to the 200-day simple moving average. Our last big rally failed directly at the 200-day simple moving average. So just because we get there doesn't mean we aren't going to fail. If we fail there, maybe we are going to have an end of the year sell-off. Maybe December is going to be ugly. But if we can break out of our bear fork and retake and close above our 200-day, we could see quite a rally to end the year. But on the other hand, if all of this stuff fails, who's to say that this low holds at all here that was set back in October? And if that's the case, these are the levels we're talking about here. These areas where we sort of back tested quite a bit at 32, 35 or so back in 2020. This is where the bounce sort of hit a ceiling, pulled back, broke out, pulled back, broke out, pulled back one more time before taking off. So this is big level here. There are a lot of people that really want to see this come to fruition. Who knows? It all is predicated on whether 3,500 can hold or not. Okay? So that's that. I hope I didn't depress you too much with this video. You know, we did have an end of the year sell-off back in 2018 when Trump was president, and he was and Powell was tightening. So that combination of Trump always like bad-mouthing Powell, and he was having this, trying to get this trade deal with China going, and then the government shutdown happened. Remember that year, that Christmas? That was such good times, wasn't it? The big sell-off in December to end the year, and then Mnuchin called all the bankers on December 26th. Good times, wasn't it? Wasn't that great? Ugh, not. Yeah, we ended up having our rally in January instead. So it's always possible that that's going to kind of repeat itself here. We'll see. But a lot of volatility coming up this week. And we really need to see that 10 and 50-day simple moving average be taken out to the upside, or else a pullback that holds around 36.50 in order to really keep it tight here and just get on track to a November rally taking us into Thanksgiving. All right, that's it. I hope this video helps you out, and have a great rest of your Sunday. Hope you remembered to set your clocks back. Have a great day. Good luck and good trading.